Well, you might have realized that I haven't really uploaded any videos on this channel in a while, and you might wonder what is exactly going on with me. Well, the truth is that 2024 didn't start too well for me in terms of my trading, and you guys always knew that trading is my number one priority, and I'm not gonna sort of say put YouTube content over my trading because trading is what I do for a living. So I got to make sure that that is working well. Now, as I said, my 2024 started really rough. And you guys know that I have almost a decade of experience trading the markets, so I'm used to having losing months and things not working out. I've seen it all at this point. So the way that it started was not something that I was comfortable with. So I had to really take a step back and try to readapt and rethink what I'm doing. So what I did is step a little bit back from ICT strategies and keep some of the concepts and mainly try to make my trading a little bit more mechanical, which is what I achieved. I wouldn't say I'm 100% mechanical trading these days, but I'm definitely trading close to an 80% mechanical when it comes to decision making, which is pretty good. What you're seeing here is my journal for this second quarter. I'm gonna be going over the entire quarter because, as I said, my first quarter was really bad, and I had to really think about things in a lot more depth. Now, luckily for me, since I'm trading multiple accounts and decent sums of money, I do not need to risk that much on any given trade. So my drawdown has been always very stable, which is something that I'm really happy with. As you can see, these have been the 3 months. I haven't taken that many trades, and that is because, as an example, during this period over here, I was on vacation and I wasn't barely looking at the charts. Same with the end of June, where I was on vacation as well. But besides that, because I trade higher time frames, it's not like I get a trade every day anyway. Sometimes I do, sometimes I don't, sometimes I get multiple trades in a day, but it's ultimately not up to me. Now, as I said, this is my journal of one of my multiple accounts. As you know, I trade many accounts that are connected with each other, so every time I place an order, it gets sent out to my other accounts. And we're just going to be reviewing my journal. I want to be showing you some of the setups that I'm trading, how my strategies are changed, the statistics that I'm tracking, and some of the setups that I do trade. But first off, let's kick things off looking at some of the assets that I do trade. As you can see, for this quarter, the best performing asset for me has been gold, right over here, with a huge difference. Since I'm trading more of a swing trading approach, I'm looking at 21 markets every day. But because it's so easy for me to see if a opportunity is there, it doesn't take long to go through every market. On average, I would say that it takes me about 5 minutes of looking at the chart to know if there's going to be an opportunity today for me. And we can discuss a little bit more of that later. But that's the reason why I trade so many markets, because I trade using the daily time frame and the hourly time frame. That's it. I don't go any lower than that, and I tend to hold trades for quite a bit of time with this swing trading strategy that I've implemented. So yeah, the best performing asset was gold. I also trade commodities such as, well, commodities, indices, forex. I trade a bit of everything. My most profitable day of the week this quarter has been Wednesday, which I've taken 4 trades and won all 4 of them. And my least profitable day has been Mondays, which is something that I need more data on, because, as I said, 3 trades is not nearly enough data for me to say that I should skip Mondays, right? In terms of performance by hour, you can see that we do have a little bit of disparity here. The best hour is the New York session, which makes sense as it is the most session with the most amount of volume. So yeah, here we have the setups that I do trade and the ones that have been performing best, which is the SFP. Credit to Tom Dante for that. And the equity graph this quarter, which has been steady. up and steady. Started with a little bit of a drawdown, but nothing too concerning. And then we started to flip that around. Now, that said, let's go through some of the custom statistics that I'm tracking, because I think it's quite interesting and something that you guys need to be doing yourselves as well for whatever data it is that you need to pay attention to, depending on obviously the strategies that you deploy. For this swing trading strategy, I'm obviously tracking the day of the week. This is an extremely important metric, as I said. Depending on what the long-term data says, I might remove a day, or I might double down on risk on certain days just because the statistics tell me to do so. When are my limit orders being triggered? Because I trade 90% of my trades are failed orders that I leave in the market that eventually get filled or they don't. Active management versus hands off. This is absolutely crucial. I've been tracking this metric for years, and I can tell you with certainty that active management works best for me. But that's something that I want to continue tracking, obviously. And something that you might want to consider. What is the result of your trades if you don't do anything? Because a lot of people will come to the conclusion that actually not doing anything is more profitable than trying to manage it yourself, whether it be moving to break even, whether it be taking partials. You need to know what the best result would yield depending on what you do. It's absolutely crucial. For me, as I said, active management performs better than hands off. But nonetheless, I want to keep tracking this metric. The entry type, as I said, 90% are limit orders and about 10% are price action entries. The confluence level that I have for the areas that I'm trading, how did the market get to my limit order? That's something that I want to know. The reactions after I'm in the trade, where I'm placing my stop, where I'm actually placing the order, and things of that nature. There's a lot that you can work with and a lot that you can track in order to help you make better decisions in the long term. But that's for now what I'm tracking this quarter, because as I said, I make a new journal every time a new quarter is there, and I look if there are any other custom statistics that I need to track, if there's anything that's not usable for me that I need to remove. And essentially, how am I going to be optimizing my trading moving forward? Because trading is all about adapting and making sure that you're following what you need to be doing to the T. Besides that, we can go a little bit into my setups, but what I really want to focus on today is this one, the SFP. Once again, that's not to take any credits for me. That's a Trader Dante setup, and it works very, very well for me. And I'm going to be actually doing now is showcasing you one of the trades that I took using this setup, which was on US 30. Let's go over here. Let's go to the custom stats. As you can see, I fill them out for every trade that I take. This is one of the rare scenarios where I actually took a price action entry instead of a limit order. And we do have some screenshots of the execution, but we're going to be going into the chart in a second. I just wanted to see to showcase the how it played out essentially. This line that you see over here is a big liquidity pool that I'm going to be showcasing later, as I said. And the moment I see that we snap above it and close sharply below, I'm sure that I need to be going short. So that's sort of the executions on my MT5. This is the daily perspective with the liquidity pool. Now, obviously, looking in hindsight, you can say, well, you closed early. Yes and no. My mechanical approach tells you that I need to hold up until the next area of trouble, which clearly was this area of high over here. There is a high chance that the market could have, maybe I can try to zoom in here. There was a high chance that the market could have tapped this high, bounced away, and moved higher. So what I'm always doing is playing from one area to the next. So when I'm entering the trade, I'm asking myself, where's the next area where potential trouble could be at? And in my eyes, it was obviously this high here. So that's why I decided to exit there. Let's take a closer look by jumping to the charts. forget about this. This is a limit order that I had this day here that I then canceled because it reached my original take profit without me being in the trade. So I'm canceling this order. This order is not valid, although you can see that the level did work nicely so far, but that's not relevant as of now. So the trade was simple. The way it's set up to me was like this. I'm always marking out the major swing highs and swing lows on any market that I'm trading, and this to me stood out as a major swing high, right? There is a high degree of probability that a large amount of stop losses are resting above that liquidity pool, buy side liquidity, right? So when the market came up there, I was interested in looking to short this market. Why? Because we've triggered a pool of liquidity, and there is a high chance that if we do break above the swing high and close below, which are my conditionals, to me, the statistics say that there's a higher probability that we're gonna run into the next pool, which in my opinion was this high over here with this closure of this fair value gap. But that's not something that I'm really considering. All I'm concerned about is, did we break above and close below, and where is the next liquidity pool or area of trouble? In this case, was right there. So once I've done that and this candle has closed, which is my conditional because I'm looking at the daily and the hourly, we can now investigate the hourly. So the market moved sharply into the area, right? Which is nice to see, although not necessary. So we traded above this high. This is right here where the daily candle closed, right over here. And what I needed to do was simple. Just take a trade, right, as the daily candle closes, put your stop based on a 24 period ATR concept, which is not the swing high. If you see, if I would have placed my stop above the swing high, I would have been out of the trade. My stop loss was fractionally higher, which kept me in the trade, and target the next trouble area, which once again is subjective. Depending on how confident you are about the trade, you could look at any of these three areas, but I really wouldn't go anything beyond that. This low is fine, this low is fine, and this high is fine. So what do? We enter the trade. As the daily candle closes, we go into drawdown, but we do survive and stay in the trade. Now, what else did I do? Because I didn't just take this trade, I actually added to my trade. And I tried doing that several times, which I didn't get the chance to do. Now, where did I add to this trade? For me, it was obvious. This breaker block that is sitting over here is a great area to add. Why? Because we've broken below this low, we've accepted multiple hours, and then we've come back to it with space. To me, that's a clear indication that I need to add to this trade. Now, what did I do? I placed a limit order here. I place my stop above the thrust candle, never above or below swing highs, and I trade my original stop loss as well. So now this position that was a 121.78 has now become almost 5R, or just a little bit over 5R, just by simply adding to the trade and reducing your stop loss. And this trade ended up working very well, as you can see. And was a success just by simply following the plan and being patient with it. So let's see if there's anything else that I want to cover, but that was sort of the purpose of this video. I will try to upload content on this channel. Let's see how you guys respond as well. But I just wanted to say that my 2024 has been bad, and please allow yourself to write down in the comments how your 2024 has been. This second quarter has been decent. It hasn't been great. I have had better returns, but considering I was so much time away from my desk, it is a decent performance with a 50% win rate, with a decent profit factor, and all the rest of it, which hasn't been, once again, win rate not the best, but you don't really need a high win rate when you're winning a lot more than you're losing every time you win. Once again, my biggest winner has been 5%, and my biggest loser has been only 2%. So yeah, that is all for the video. Thanks for watching, and I'll see you in the next one.